This is the Asia Trade. I'm Paul Allen in Sydney, where the market's just opened.
I'm Haidi Stroud-Watts. The top stories this hour. Asian stocks are set for a positive start after Wall Street snapped that 5-day drop. Japan set to reopen for the new year with the yen slightly stronger against the dollar.
Nippon Steel shares will be in focus after President Biden blocked its $14 billion US steel takeover bid, citing national security risks.
And Hon Hai, another one to watch in the session, delivering an upbeat sales growth outlook as the global AI build-out accelerates. Well, let's get to today's agenda, and of course, as we sort of properly creep into the new year, Paul, we're sort of looking at a lot of the same themes that we ended 2024 with, and one of them is obviously whether the US job market is going to continue on this trend of, moderately cooling yet still healthy, right? We've had average monthly job growth last year continuing to step down, but in a pretty consistent way. We're expecting the December US jobs report to really cap that year of moderation when it comes to hiring. We are expecting 160,000 increase when it comes to payrolls, pretty consistent with still a firm looking labour market as well. That unemployment rate forecast to hold steady at 4.2%. Average hourly earnings growth seem to be cooling. So still kind of indicating a labour market that's no longer a source of inflation. We know that could change, for example, if we get some, strong immigration policy, for example, from the incoming Trump administration.
Yeah, and the labour market's still featuring top of mind for Fed speakers as well. We heard from Mary Daly. She's saying, look, the Fed might soon face a trade-off between jobs and inflation because the inflation beast's not quite slain yet. Mary Daly, Adriana Kugler as well, both emphasising that fight is not yet over. We're going to get the Fed minutes later this week as well, so we might get an additional insight into that hawkish cut that we saw at the last meeting and just how vigorously discussed that call was. So we see CPI there still uncomfortably high for the Fed. Let's take a look at US assets. Meanwhile, they did end last week higher, snapping a 5-day losing streak. That was the longest since we've seen since April. Tech stocks led the way in that rebound. Futures looking fairly quiet ahead of the new week as well. If we take a look at crude prices, 74.04 for New York crude at the moment. We're hovering around 2 months highs. A few factors at play here. US crude stockpiles at Cushing, Oklahoma now are at the lowest level since 2007. The greenbacks softened a little bit as well, but still those lingering concerns around oversupply, the weak China demand as well, weighing on the crude price.
Yeah, it is that China picture that continues to be, a key thematic, right? And take a look at how that's kind of playing into what we're trading when it comes to dollar yuan. We've seen really yuan traders now continuing to look towards a PBOC fixing to try and gauge what level of FX support we could see for their currency. Last week we had onshore yuan weakening below that 7.3 per dollar level. So that daily reference rate continues to be a closely watched level of support. It's kind of returned to the spotlight now. So if we get that, fixing at something weaker than 7.2, we could kind of see a little bit more of a change in terms of where that line in the sand is, and big implications in particular for Chinese exporters. Watching dollar yen as we have, of course, Japanese equities trading coming back online after the last few days of holidays there as well. The open when it comes to here in Australia, we're seeing not much of a move so far this morning for the ASX.
Well, there's always a key theme. It's going to be what the Fed does next. We've got a chart here that indicates still two prices being cut, still two cuts being priced in for 2025. Of course, there's some discussion around whether that might end up being one or none. To get more on this, let's get to Katrina, Director of Economic Research at Moody's Analytics. Katrina, Happy New Year. As I mentioned there, we heard from Mary Daly, Adriana Kugler as well, that the inflation fight's not yet over. Do you think we could see some market repricing in the early part of this year?
I think we really did see some significant repricing at the end of last year, with going from 100 basis points worth of cuts expected this year to only 50 basis points. And it was really this clear realization that, continuing that easing cycle, getting back to that magical neutral rate isn't going to be a fast journey. It's going to be slow. And what's a key input into that sluggishness is the fact that the labour market has held just so resilient. And certainly that's a good thing. But at the same time, it does mean that inflation is taking longer to get back to that 2% target range.
And there's a few wild cards to consider here as well in terms of fiscal policy going forward. A new residents in the White House, a risk of tariffs, trade war with China. to what degree is this going to feature in the Fed's thinking?
Yeah, I mean, I think you've really hit the nail on the head there. There's a key wild card when it comes to Trump's policy and how aggressive he's going to be in implementing those policies, particularly around tariffs, but also those other policies around immigration. If we do see significant immigration cuts, then that means that the labour market will likely tighten quite significantly. At the same time, he's also proposed some pretty significant changes to corporate and household tax cuts, which are of course inflationary at the end of the day as well because of that stimulatory side of things. So that wild card really needs to be considered, and I think the Fed is treading incredibly carefully when it comes to that forward guidance as a result of that.
And there's flow-on implications for, of course, other economies as well and central banks. Does this mean that this easing cycle could be quite atypical?
Oh, definitely. I mean, I think there's no part of this monetary policy tightening and now easing that has been typical, and I think that's going to continue to be the case. So I think that the lesson going into this year is really to expect the unexpected and continue to stay vigilant to what the data is telling us, but also to what, the fiscal policy announcements will be, particularly coming out of the US, because that's going to drive a lot of the narrative, including here in Asia.
And it's interesting because I think the expectation also is that even though Trump 2.0, you think from Beijing's perspective, well, they kind of know what to expect after one term. At the same time, with all the domestic weakness, does this make the sort of stimulus challenge and the space that policymakers in China have a little bit more, pressured?
Oh, definitely. I mean, I think, during the first Trump presidency, China's economy was in a stronger position than it is now. It's really limping into this year. And exactly as you say, that domestic demand weakness is palpable. And what was an important strength for China last year was their exports, but that export picture is severely threatened by the proposal of tariffs. So I think what we're going to see from China and what they've already announced is that ongoing stimulus picture. But I think as well we need to be cognizant of the fact that what is causing that domestic weakness in China, that correcting property market, the weak labour market, they're not easy problems to fix as well. So I think that's going to continue to challenge China. So I think we're going to be in for a really rocky year, just like what last year was.
Do you have a growth outlook for China in 2025 and sort of linked to that? The growth outlook for other Asia-Pacific economies that rely so heavily on China as their largest trading partner?
So we're looking at about 4.3% GDP growth for China this year. So our expectation is that China reached about 4.9% last year. So that's a markedly weaker picture at this point for China. It's coming off expectations that exports are going to be more challenging, and at the same time we're going to see some improvement in domestic demand, but it's not going to be a meaningful change by any sense of the imagination. And at that same token, we do have a more challenging export environment baked in for our other economies in Asia that we forecast. And so while the expectation was that we would see easier monetary policy settings globally would provide a more supportive export environment, that now looks like it's not going to be as supportive. So we have dialed back that positive spillover.
We're going to get some CPI numbers out of China this week as well. Do you think we're going to see deflation reappearing as a narrative?
I mean, unfortunately, it's not good news when we're looking at the inflation data for China. We're looking at the latest print to show about a 0.2% year-on-year expansion. So that's similar to the November pace. But I think what's really important to look at with China's inflation data is that underlying print. That's still going to remain incredibly weak and well short of their 3% target that they were hoping for last year.
Katrina, really great to have you with us as we look ahead to what could be a lot of uncertainty in 2025. The Director of Economic Research at Moody's Analytics. One of the stocks that we are watching at the moment is Insignia. Shares rising almost 10% after that takeover bid from CC Capital. We have, of course, seen some of these moves coming on the back of that $4.30 Aussie per share cash bid from CC Capital, really trumping the previous offer that we had from Bain. So we continue to watch that as one of the movers very early on in this session. More ahead on the Asia trade. This is Bloomberg.
South Korean news agency Yonhap says a court has dismissed an appeal by President Yoon Suk-yeol's lawyers against an arrest warrant. The warrant came after Yoon refused multiple requests to appear for questioning over his declaration of martial law last month. Our chief North Asia correspondent Stephen Engels in Seoul and joins us now. So, Stephen, what's going to happen next?
Well, I wish I could say that there's a lot of new developments, but over the weekend, it's really pretty much a standoff, a legal standoff, as you just outlined, as well as a physical standoff. Yes, it was below freezing temperatures and snowing yesterday in Seoul, but protesters from both sides did gather outside of where President Yoon is said to be holed up in his residence in central Seoul, braving those temperatures and the weather. And again, it's going to come down to perhaps a legal fight right now, because you just mentioned about the Seoul Western District Court dismissed the appeal by Yoon's legal team to throw out those arrest warrants and search warrants that were issued last week. By the way, that warrant for his arrest expires in 16 hours' time at midnight later Monday here in Seoul, actually early Tuesday morning. So, time is of the essence. But again, nevertheless, Yoon's legal team says they are they're mulling appealing to the Supreme Court to overthrow the Seoul Western District Court's ruling over the weekend or on Friday. So again, it's a legal standoff and also a physical standoff as Yoon Suk-yeol holds on and tries to buy some time. Obviously, ultimately, the final arbiter might be the Constitutional Court, which is still deliberating on whether to enforce that impeachment that was done by the National Assembly on December 14th.
And obviously diplomatic partners are watching this drama very closely, right? Antony Blinken in South Korea and around the region. How does the US approach this, given that Yoon was at one point, a very popular figure with the Biden administration, particularly with his, policies towards Japan?
That's right. I mean, and Antony Blinken is here in Seoul. He arrived late last night. He will be meeting with his foreign minister counterpart, Mr. Cho, later today. He's going to reaffirm, of course, the ironclad relationship, strong alliance between the United States and South Korea, as well as what is a hallmark of the Biden administration is the trilateral rapprochement, if you will, between, of course, Japan and South Korea. And, of course, the United States during the last 4 years under the Biden administration, reassuring them that there's a strong commitment to those alliances, given, of course, the uncertainty surrounding President Yoon and his impeachment and possible ouster, as well as the incoming new president in just a couple of weeks' time in Washington with Donald Trump and his threats, of course, for allies to pay more of a bill for defense, as well as the threats of tariffs. So there's lots of uncertainty. They're going to sit down and talk them through. Not a lot of promises, obviously, Mr. Blinken can give to his South Korean counterparts, but perhaps some reassurance is warranted.
Our Chief North Asia correspondent Stephen Engel there, and as we're speaking, there is a further development in this situation. The Korean CIO, the corruption investigators, handing over the warrant execution for President Yoon to the police. This is according to the latest reporting from Yonhap. So we'll continue to monitor these further developments, but we did see that South Korean court dismissing the appeal by the lawyers of Yoon Suk-yeol against an arrest warrant. That arrest warrant is valid until January 6th, and Yoon's lawyers tried to claim that it was flawed. So we see that further development, but the CIO handing over the warrant execution for Yoon to the police. We'll have much more when it comes to the ongoing political turmoil in Seoul in the next hour of the Asia Trade. The Korean Council for Peace and Cooperation will be along with us for those insights and some more analysis. More ahead on the Asia Trade. This is Bloomberg. Well, the iPhone maker Hon Hai reported better than expected sales growth last quarter, giving positive outlooks when it comes to the AI infrastructure build-out accelerating. Let's bring our China correspondent Min Lo for more. So this was better than expectations. How big of a beat was it?
Yeah, it's a pretty strong quarter for Hon Hai, which brought in about $64 billion in revenue, up 15%. Expectations was 13%. Its December sales in particular, it was over $19 billion. That is 42% up from the previous year. So a very strong quarter that is bolstered by its sales in the cloud services sector, because you have all these big AI companies like Microsoft and Alphabet really pouring in massive amount to invest in cloud servers. And this is a sector that the company is trying to diversify into. We know that Apple is still one of its biggest clients, contributing to over 40% of its revenue, but the cloud services sector offers higher margin, 10 to 12% versus 4 to 5% for its typical assembly business. So the company says it still expects significant growth in the first quarter of next year.
Min Min, the company is also looking to diversify into the EV business. What more do we know?
Yeah, this is a relatively new segment. It really ventured into the EV business in 2020, but as of last year, the company said it still needs about 5 years to fully utilize its production line that it acquired in the US in 2022. And this segment really hasn't had a meaningful impact on its earnings just yet. We know that the company aims to acquire about 5% of the market share in the global EV market. It wants to have a presence in Japan, Southeast Asia, and the US, but so far in its home market in Taiwan, it has only been able to secure corporate clients for now for its current EV offerings. And the company, we know, has also reached out to Renault for a potential tie-up with Nissan, but that has been put on hold for now while Nissan and Honda work through their merger deal.
How big a threat are these expected, I should say, US-China tensions be for Hon Hai?
Yeah, certainly it is going to be facing a lot of headwinds geopolitically, but Hon Hai is still a very strong market leader in its segment, especially when it comes to electronics manufacturing. Its output is about 3 times more than its closest peer, so that puts it in a very strong position to bargain for bulk discounts when it comes to procurement. And then you add to that its vertical integration, its very diversified production basis, plus it has very strong partnerships with the likes of NVIDIA, for instance. So NVIDIA's new model launches in the next few quarters will be a potential bright spot for Hon Hai, and also its expanded offerings into chips and components. Those could be potential drivers for growth when the demand for iPhones and for PC computers stabilize.
All right, Bloomberg's China correspondent Min Min Lo there. Let's take a look at some other earnings releases to monitor this week. Samsung will probably report a rise in fourth quarter operating profit on Wednesday, and that is off the back of AI-related demand for memory chips. Uniqlo parent Fast Retailing may see operating profit growth soften as warmer temperatures affect sales. And 7-Eleven chain operator 7&I could also report a double-digit decline in third quarter operating profit this week. Consensus is that growth in its superstore operations was offset by profits slipping across other segments.
Let's take a look at the latest when it comes to the corporate headlines we're following. Poland, Italy is in advanced talks with SpaceX for a 5-year contract to provide secure telecommunications for the government. Sources say the $1.6 billion deal is aimed at supplying Italy with top-level encryption for telephone and internet services. The plans are being opposed by some Italian officials who are concerned about the impact on local carriers. Microsoft plans to spend $80 billion this year building data centers, with over half of the projected spending to be in the US. Cloud infrastructure providers such as Microsoft and Amazon have been racing to expand computing capacity by constructing new data centers. Microsoft spent over $50 billion on capital expenditures in the last fiscal year. Shares of Getty Images rose sharply on Friday after Bloomberg reported that it's exploring a combination with rival Shutterstock. Sources say Getty has been weighing how to structure a deal that would bring together two of the biggest providers of licensed visual content in the US. The merger deliberations come as AI upends the content creation business.
It's been 1 year after a door panel blew out mid-air on a Boeing jet. The top US air safety regulator says the plane maker's efforts to improve quality still in the early stages. Bloomberg transport reporter Danny Lee joins us now for more. So Danny, has Boeing learned any lessons from the Alaska Airlines 737 MAX incident?
Yeah, I mean, 1 year on after a near catastrophic incident that took place 1 year on. It can best be summed up by the views of the outgoing FAA regulator in the US, Mike Whitaker. He's saying that this is not going to be just a one-year project. And in fact, when he's been overseeing Boeing's crisis, many crises, in fact, that he wants to see a change rooted around its culture, around safety and quality, and not one that prioritizes profits here. And so when you hear those kind of comments, the current challenge for Boeing right now is that its ability to produce more Boeing 737 Maxes are limited. And with those comments, it doesn't sound like the FAA is going to change its stance anytime soon. And that has a direct impact on Boeing's finances and its ability to even just get back to a sense of normality. But we have seen it in the past year, huge upheaval for Boeing in its management. We've also seen it with the direct financial impact. It has been under having to raise over $20 billion US, and also the strike around its biggest factory that we've seen over the past few months recently. That's also had a big impact on its finances. And with its finances undergoing losses of 30-odd billion in the last 6 years, there has been a huge pressure for them on its balance sheet. But within all of the upheaval, Boeing has insisted it has changed. It has taken steps to try and change the past, the culture as well. But there's a lot that still needs to be done under Boeing's new management. And with the new management and with a new presidency, in fact, coming to place and a new FAA head, there does remain a question whether someone like President-elect Trump would tolerate further decline at Boeing, which arguably is a great American company, and so whether he will support it more to ensure it can get back on its feet quicker in order for it maybe for him to even claim credit. So yeah, there's a lot still to be done at Boeing in the meantime.
Boeing also, of course, dealing with the legacy issues such as the impact of the two fatal 737 MAX crashes in 2018, 2019, not to mention, of course, the most recent Jeju air disaster as well. What are we seeing here?
Yeah, the Department of Justice in the US and Boeing are still trying to come to an agreement to settle a criminal case regarding the two earlier fatal 737 MAX crashes involving Ethiopian Airlines and Lion Air. They're still not come to an agreement yet, but they are hopeful of closing that in the months or so to come. We have to just take a look back at actually this deal was seemingly going to go through initially, but a few months ago that was blocked in Washington because a judge was not happy with some of the criteria around how Boeing would potentially be monitored and improve itself going forward. So that's, for that to be settled will be a big step forward for new Boeing CEO Kelly Ottberg. But yeah, that does, with this and many things for Boeing, a number of things that Boeing still needs to fix, a long list of things to do for Kelly Ottberg.
Bloomberg's Danny Lee there. More ahead on the Asia trade. This is Bloomberg.
Let's check in on shares of Insignia, the best performing stock on the ASX right now, better by more than 10.7% at the moment. Now, this is after it received a $1.8 billion takeover offer from CC Capital Partners. That's 2.9 billion Aussie dollars, values that the wealth manager at $4.30 per share, so a pretty chunky premium over the current price. So let's get a little bit more on the story. Our pension reporter Amy Bainbridge joins us now with the details. So Amy, this offer comes after Insignia rejected a buyout bid from Bain Capital last month. How big a player is Insignia in Australia's wealth management and retirement market?
Good morning, Paul. It is one of the biggest players in the wealth management and retirement market here in Australia. Look, Insignia Financial has been on somewhat of a journey over the last 12 months or so. The CEO, Scott Hartley, has only been in the role since March last year and has really been trying to drive efficiencies across the business. And under its, I guess, sprawling assets, there is, of course, as we mentioned, the retirement, the pension assets. There's wealth management. There's also financial advice, which they see a real area of growth. Scott Hartley told me late last year. And there's also an asset management business. So that all makes Insignia one of the biggest players in the market. It has a number of pension brands. And of course, the retirement market here is fast growing. So this is yet another takeover proposal, hot on the heels of that Bain proposal late last year.
Why is this space interesting at the moment for international players?
A number of reasons, Heidi. This is the fastest growing retirement market in the world. We have a number of, the biggest players looking forward, and the projections for this industry are huge. Assets under management currently are more than 4 trillion Australian dollars, and that's set to triple in coming decades. So it means that the retirement space, for one, is a very appealing one to play in. We know that the biggest players here are now investing a lot of money overseas. They're very outward looking. They're global players. So that's the first thing. Speaking to Insignia last month, they are very much looking at the affluent end of the market as well for their financial advice business. They see that as a real area of growth. And Scott Hartley has been talking a lot about how to drive efficiencies in that business and grow the business. Important to note, of course, that retirement savings here in Australia are propelled somewhat by not just the investment returns, but the compulsory contributions that are the equivalent to 11.5% of workers' wages. That's going up to 12% this year. So it means that there is a lot of money coming into the system, and that surely does also add to the appeal from these global players as well.
Okay, well, CC's got its offer on the table, $1.8 billion for Insignia. What are the considerations for this deal going through?
Well, it's a non-binding offer at the moment. We know from the statement that Insignia has released to the Australian Stock Exchange this morning that the board is taking some time to consider the next path forward. But even if they do decide unanimously, which they would need to, that this is in the best interests of shareholders, it still needs regulator approval. So that's the Australian Prudential Regulation Authority. It would need to take a look at it, as well as the Foreign Investment Review Board. So there are a few other hurdles to get through, even in the event that the Insignia board does believe that this is the right offer to accept. So I guess we'll just have to wait and see how things play out in coming days, Paul.
Australian pensions reporter Amy Bainbridge there. Let's take a look at the Japanese markets reopening today for the new year in less than an hour's time. This is how the Nikkei 225 fared in 2024. It just gained just shy of 20%. Let's get over to Tokyo. Our Japan markets reporter Kana Nishizawa joins us now. And Kana, Happy New Year. How are we sort of looking at Japan's reopening?
Oh, Happy New Year. Japan is reopening from a 6-day holiday. And the futures at the moment point to slightly lower open. That's tracking the weakness in the U.S. markets while Japan was shut. The yen is slightly stronger than where it finished off in the last closing day. So that might weigh a little bit. But in the near term, there's a bit of focus on the tax-free account for individual investors, NISA, as the yearly quota just reset. So some people are expecting some buying to come through from that.
So how about the longer term view? What's the outlook for 2025?
Right. So analysts, many analysts from including JP Morgan, Citigroup, they're saying that they're expecting the Nikkei and the topics to reach record highs again this year. We're actually not too far away. We're about less than 6% from those levels. And the drivers of that might come from financials, banks, insurers. They were the big winners last year. And many investors have said that they'll be in focus again this year with the BOJ expected to raise rates, which would be beneficial for lending income for banks. Also, they still hold a lot of cross holdings, and the expectation is that they'll continue to unwind those holdings, giving them more cash for potentially more dividends and share buybacks. And the other thing is the improving corporate governance, rising shareholder returns, and also profitability are some of the other drivers that investors have mentioned.
What are some of the risks that are being seen?
So domestic consumption, the strength of it is where we've seen some diverging views. I mentioned profitability earlier as a potential driver, but some are skeptical that we'll see a meaningful pickup in domestic spending because of the Japan's low growth rate, structural issues, and some are also skeptical that Japan has really exited from its deflationary mindset. And the other one is a bit obvious one, but a Trump risk uncertainty. As some analysts have warned that he could implement tariffs that are much tougher than people might be expecting now, which, especially at a time when there's concern around how well Japan is positioned to negotiate as a minority government.
Yeah, the Trump presidency, the risk of trade was certainly a big theme heading into 2025. What are some of the other big themes that we're watching out for in Japan?
So the near-term GPIF, Japan's pension fund, state pension fund, it's set to announce this 5-year asset allocation plan. And there's been speculation that they're going to increase its weighting to domestic equities just because of to deal with Japan's aging population. And if they do that, the impact on the market will be quite big, just given the sheer size of the fund. And other pension funds tend to follow the GPIF. And the other one is the M&A and activism. Last year was a really busy year with record buying of Japanese stocks by activist funds. And investors, a lot of investors have said that trend will likely continue, both deal front and activists. And they might target companies, they might further target companies with holdings of valuable real estate assets.
All right, Japan markets reporter Kana Nishizawa in Tokyo. Thanks for joining us. And we've got more on Japan coming up next. We're going to get the outlook on the nation's M&A scene after a busy 2024, and with President Biden blocking Nippon Steel's takeover of US Steel. Much more ahead. This is Bloomberg. All right, we've got some live pictures of the Tokyo Stock Exchange there. It's going to open in just under 20 minutes' time for the first session of 2025. Had an extended public holiday to kick off the year. There'll be a ceremonial bell ringing. There'll be a special guest as well. The finance minister will be there to give a speech after we hear from the exchange CEO Hiromi Yamaji as well. So some ceremony there to kick off the new year as we await the first trading session in Tokyo of 2025. All right, well, President Biden has blocked Nippon Steel's $14 billion takeover of US Steel, citing national security concerns. So for more on this, let's get to senior energy reporter Stephen Stapczynski. So, Stephen, is this the end of the matter, or are we off to court?
It's looking like we're off to court, which poses a complicated and somewhat confusing sort of future for the deal. Now, CFIUS, under this review and under M&A, especially foreign M&A, the White House has total authority. It leaves a little bit of wiggle room for some litigation in terms of the process, and that's likely where Nippon Steel and US Steel are going to try to hit. They're likely going to argue that the CFIUS review should have given them a warning when it looked unlikely they were going to come to an agreement on whether to approve it or not approve the M&A. Because of that, it provided them an unfair situation where they weren't able to fix and course correct or change certain things, offload assets, or promise to make certain divestments or investments based on what the CFIUS review said was against the national security. It's all very vague, and already US Steel and Nippon Steel have come out publicly saying that this was politicized and isn't in the best interest of the industry. US Steel is struggling, especially against a really strong China, which is now the largest producer of steel. And because of that, they need this cash infusion. They need a partner like Nippon Steel to continue and even expand within the United States.
It was interesting, according to reporting, apparently Yellen was one of those concerned that sort of the flat-out rejection of this might damage the credibility of CFIUS. Is this an ongoing concern?
Yeah, I mean, it wasn't just Yellen. Blinken and a number of other top advisors to President Biden had come out against this. Now, CFIUS is supposed to be, it's somewhat secretive. The process that they use is not 100% well known, but it is supposed to be this balanced sort of non-political organization, which in Treasury. Now, this could have a larger impact. If you're a Japanese company looking to make a big investment and you're looking at all your cards on the table in the United States, across Asia, and other places, that is going to be one of the risks now that you have to weigh. So this could affect future large M&A. That being said, we haven't seen yet a chilled effect, especially where I spend a lot of time talking to Japanese companies that invest in energy. They're still very much interested in investing in U.S. natural gas, U.S. oil, and the export of energy. That's not something that's been chilled over the last year while this has become remarkably politicized. That being said, I think going forward, that is something that boardrooms are going to have to consider. And when you look at the role of CFIUS, it's going to be a new risk that wasn't quite there before.
Our senior editor reporter Stephen Stepchinsky there with the latest on Nippon Steel. Our next guest says Japan is willing to put up with a lot to maintain the relationship with the US. Let's bring in Tobias Harris as a founder and principal at consultancy firm Japan Foresight. So if we kind of glean from this decision that the US might be moving towards kind of a broader, vaguer definition of national security risk, perhaps away from globalization, what does that mean for trading partners like Japan and the incentive for outsiders to want to invest or attempt to invest in the US?
Well, I think you have to start from the position that for Japan, I mean, the United States is an absolutely indispensable partner, both in security terms, of course, but also I think the U.S. market, U.S. companies as partners. I mean, there's no way around working with the United States. And I mean, let's be honest. I mean, Japanese companies have dealt with a lot of political risk in China for a long time, and so. There's an ability to work around that, to recognize this is the way the winds are blowing, but that doesn't mean that you stop all activity or that you are no longer interested in investing. It just means that you have to get smarter, you have to be a little more prepared. And I think we've already seen this trend with a lot of Japanese companies really investing more in just political risk understanding what they're dealing with in the United States, whereas in the past they maybe didn't put as much thought into that.
But it's interesting, isn't it? Because even, a proposal from a Japanese company, as close as the alliance is and as trusted as that relationship is, it's been denied with, not a great deal of detail in the reasoning. Does that tell you that there's a kind of a shift in the politics of global trade and investment, or is this the reality that has always been?
Well, I mean, if your memories are long enough in Tokyo, of course, you go back to the 80s and the trade protectionism of that period that led to, a big surge of Japanese investment in the United States anyway. But even over the last decade, I mean, I think, there really has been an understanding in Tokyo that both U.S. parties now have shifted in the direction of economic nationalism, of greater protectionism, and this is just the reality. And you find opportunities where they exist to work with the U.S. government. Of course, I mean, the Biden administration talked a lot about friendshoring, and there were opportunities to collaborate in certain areas, but I think Tokyo now recognizes that you're not going to be able to wind the clock back to 2015, when the United States was still committed to TPP, for example, that the kind of priorities that you're getting from U.S. administrations of both stripes are just going to be different. And I think that it's a challenge that has to be navigated. You still are going to look for opportunities. And I think, frankly, we'll see what we saw during the first Trump administration, I think, going forward, which was Japan looking for closer relationships with other partners who are committed to the rules-based international order, for lack of a better term. And so you saw the Japan-EU deal finally get done during the first Trump administration. You saw a bit of a thaw with China, which I think we might be seeing the early stirrings of with that as well, with Japanese foreign minister's visit to China late last year. So I think we're going to see more of that, but there's no giving up on the United States. They're still going to continue to find ways of cooperating with the United States, of profiting from the United States and profiting from the size of its market.
Okay, so there's no giving up on the United States, and you say you've got to find opportunities where they exist. In this era of economic nationalism, what do those opportunities look like? Where are they?
Well, I mean, it does start with the fact that you're going to have a new U.S. administration that wants foreign investment in the United States, has made a big deal out of that, was loved to show that, companies are coming and, opening big plants and employing American workers. And that is something that Japan has done consistently well now and remains the largest provider of FDI in the United States among all U.S. partners. And so, I mean, that kind of thing, there's no way around that. And I think you're going to see a lot of effort from the Japanese government working with corporate Japan to ensure that that kind of commitment to the United States continues. Because frankly, again, you have to look at the bigger picture and ensuring that the United States is committed to Japan strategically, committed to Asia in security terms, that has to continue. And so if the price of that is ensuring that Japan is committed and, hey, there's still profits to be made from investing in the United States, I think that's a price that everyone is willing to pay, even if there are political risks that have to be navigated.
In terms of the security arrangement, could we potentially see the Trump administration asking questions about that as well heading into 2025? You mentioned Japan might look to other partners on trade. Could they look to other partners on defense?
Well, I think, overall, as things stand now, there's not really an alternative to the United States as a security partner and provider in the region. And I think that's the reality. I mean, Japan has been invested in deepening security ties with other partners in the region, networking between, among U.S. allies, so closer ties with the Philippines, closer ties with Australia, with various Southeast Asian partners. That's going to continue. But none of that really at this point is a substitute for working with the United States. I think the biggest question as we head into the second Trump administration is where Japan and really where U.S. alliances in Asia fit in the president-elect's priorities. And I don't think we know. I mean, there's a lot going on in the world. The Middle East is busy. Of course, you have the ongoing war in Ukraine. I'm not quite clear where putting pressure on U.S. allies in Asia to spend more is going to rank next to NATO, for example. So for the moment, I think Japan and South Korea probably have some time before they'll really face intense pressure. But I think that pressure to spend more is going to come. To pay more towards hosting U.S. forces in Japan is going to come. And I still think we don't really know what the balance of power really within the second Trump administration is going to look like. Are you going to have predominantly China hawks who recognize the value of Japan's alliance with the United States and the value that the U.S. gets from that alliance? Or are you going to have people who are more interested in restraint and unilateralism and really, if Japan is not willing to give the Trump administration what it wants, that they're going to be willing to threaten pulling back some troops or something of that nature. I would suspect the former outcome is more likely than the latter, but I don't think we can rule that out entirely.
There's uncertainty potentially in that trilateral, right, as well. We've got Blinken in South Korea. At the moment, he's headed to Tokyo after that. What's your sort of assessment of the political turmoil in South Korea and what a new government's approach to Japan could be?
I would say that the progress we've seen in the trilateral relationship is certainly likely to stall, if not go into reverse. And that's unfortunate, but that's really politics, I think, in all three countries just make it very difficult, I think, to see things moving forward. I mean, I think during the first Trump administration, the president was not terribly interested in mediating between Japan and South Korea as their dispute got worse. And I'm not expecting that we're going to see that much more interest in doing that again. Of course, the situation in South Korea, I think, certainly you have limbo right now, and that's going to prevent, really any kind of real progress on the bilateral front between Japan and South Korea. But of course, I think if you do get a shift, to the left, a replacement of President Yoon with someone from the Democratic Party of Korea, you're likely to get, I think, maybe another stalemate in the bilateral relationship, just because this is clearly a party. I mean, we saw their first impeachment motion against President Yoon mentioned his diplomacy towards Japan. This is not something that they're terribly interested in continuing. It's possible, of course, the DPK is perhaps more hostile towards China than it has been in the past, and so maybe there's a possibility for more security cooperation on that front. But it's hard to be optimistic. And then on the Japanese side, I mean, with Ishiba leading minority government, I think there's a real risk that if you were too friendly to South Korea, the potential for backlash from the right wing of the LDP is, I think, significant. And so you add up all of those factors in all three countries. It's hard to feel too optimistic that trilateral cooperation is going to be deepened much more than it has in recent years.
All right, Tobias Harris, founder and principal at Japan Foresight. Thanks so much for joining us. And you can catch Japan Ahead every Monday, 8:40 a.m. if you're watching in Tokyo. And subscribers can watch live on the terminal using the function TV Go. Right, we've got some live pictures for you as well from the Tokyo Stock Exchange. There's going to be a bit of a ceremony to kick off the first trading session of 2025. There you see the Finance Minister Katsunobu Kato giving a speech. We've been hearing from the CEO of the Japan Exchange, Hiromi Yamaji, as well. There'll be a ceremonial bell ringing ahead of the open, which is just over 7 minutes away. More ahead on the Asia trade. This is Bloomberg.
Well, no doubt about it, last year was a tricky one for climate change. I mean, not least of which we had heat records, climate records being set, but also a great deal of a lack of progress, if you will, when it comes to climate negotiations, be it you take a look at the sort of move towards net zero, but also even some of the negotiations on plastics was deemed to be disappointing too, right?
Easy to feel a sense of despair, isn't it? And a lot of people do, but Bloomberg's here to help you all out. We've got 9 tips on the Bloomberg terminal, things you can actually do. Some of them are as simple as playing a board game. I'm not really sure how that's going to help in a meaningful sense, but Catan, which is a game a lot of people are familiar with, that's out with its own Catan New Energies game, one that's sure to start up a vigorous argument on social media. Quitting beef. If you quit beef, you can reduce your daily carbon footprint by half. So something to consider.
And it's not even saying go full vegan or vegetarian, right? You can just trade it in for pork or chicken. Better yet, of course, legumes and vegetables are the best option. Cutting your plastics use, given the sort of disagreement on those plastics negotiations, consuming less plastic, and of course, renting an EV.
Well, we can all do something. In the meantime, let's wait for the market open. Seoul and Tokyo up next. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens, and of course we are counting down to the resumption of trade in Japan. We had, of course, that sort of more elongated few days off for Japanese markets. We have the ceremony at the Tokyo Stock Exchange as well as that gets underway. One thing we'll be watching for is this Nippon Steel story right after President Biden blocked that $14.1 billion takeover of US Steel. We're expecting a press conference from Nippon Steel later today.
Yeah, inflation is going to be a theme that dominates this week. We're going to get numbers out of China here in Australia as well. We might even see China slipping back into deflation. But yeah, Korea definitely one to watch for political risk. President Yoon avoiding arrest again.
This ongoing sort of standoff, right? We're hearing that arrest warrant execution has been handed over by the Corruption Investigation Office through to the police. So we watch for further developments as that warrant is set to expire today. Let's get you straight to the open though, and the Nikkei 225's just jumping online after a few days off. We're seeing a little bit of sort of fluctuation there as we get a little sort of a read on things, but we are expecting to see the yen to kind of be in a pretty comfortable state at this point for Japanese equities. That's kind of been the assumption from the likes of Goldman Sachs as well, but also quite interestingly we're seeing JP Morgan saying bet on the yen to hedge against some of the risks coming through for the US economy as well. Dollar yen at this point about that 157 handle, not much to kind of be concerned about either way. And as Paul mentioned, we're also watching trading when it comes to Korea, and it's been quite interesting as we've seen that reaction in the Friday session. Even with that political standoff, it seems like investors are now just seeing that kind of discount for Korea as being too hard to ignore. At the moment, we're seeing in particular a lot of the sort of AI and chip related names being a real highlight. The Kospi and the Kazdak in particular up by just about 0.4%. This is, of course, the latest development, Paul, being that the Corruption Investigation Office for high-ranking officials has sent that notification to the police, authorising the police now to execute the arrest warrant. So the drama continues there, but it looks like markets are just sort of moving on and hoping for a resolution.
Well, things are reassuringly calm here in Australia. We're off to a modest start on the ASX. The index better by about 0.4%. One stock we are watching is Insignia, best performing stock on the exchange so far. It's better by about 10%. As we were discussing, the wealth managers received a takeover offer of $1.8 billion from CC Capital Partners, so a pretty good bump there. In terms of trading on US Treasuries, not a lot of action at the moment, but we are watching that. We heard from a couple of Fed speakers, Mary Daly, Adriana Kugler as well, emphasising that the fight for inflation not over yet, and we'll get Fed minutes later this week as well, so we might get additional insight into what was a hawkish cut last time round and just how vigorously discussed that call was. If we take a look at the oil price as well, oil's been finding a little bit of strength. It's hovering around 2 months highs. US crude stockpiles at Cushing in Oklahoma now at the lowest level since 2007. Haidi.
Let's get some market analysis now. Joseph Lai is a Principal Portfolio Manager and Chief Investment Officer at Ox Capital. Joseph, great to have you with us. Lots to talk about, but Japan coming back online after a few days off. It was obviously in a lot of ways a banner year for Japanese equities last year. Where do you see the opportunities now that perhaps some of the low-hanging fruit have been picked?
Yeah, so look, our fund doesn't actually focus that much on Japan, but really it's in the Asia Pacific ex-Japan area. So perhaps I can talk a little bit about...
Let's talk about Korea. I apologise. Let's talk a little bit more. I wanted to talk about Korea, but I thought, let's start off with Japan. But yes, Korea. So I want to bring up this chart, actually, just taking a look at some of the, Korean asset turmoil that we've seen as a result of this ongoing political crisis, right? We've seen, obviously, the pressure on the won stocks as well. This rebound is super interesting.
Yes.
Given that we've seen kind of, pretty high implied upside for Korean stocks, does that mean the fundamentals have not actually been damaged?
No, well, I think what's happened in Korea in the last month or so with the political turmoil actually illustrates the fact that the rule of law is sort of working. There is a bit of a tussle, and then clearly the martial law was a bit unexpected, and the president has been impeached and awaiting, I guess, confirmation by the courts. So at the moment, we think that this actually is a bit of a noise in the market. With time, this kind of problem will resolve itself, and I think that's how the market is taking it for the moment.
Where would you be seeing some of those opportunities? Yeah,
sure. So, we particularly like those stocks which are linked to the AI, AI theme. And they're there's a few of them in Korea, like SK Hynix in particular, which supplies a lot of the chips to companies like NVIDIA. And this year, going forward, we will see bigger, hyperscalers of the US, like the likes of Google, Facebook, and Amazon, really ramping up their AI ASIC chips. And they will also require these memory chips from SK Hynix. And this is a stock which, is a clearly AI stock, supplies all the high-end memory to the AI chip makers. And it's on, on a single-digit PE, generating lots of cash expected, in 2025 and further down the track as well.
A lot of these AI names are getting quite keenly priced. Do you look at sort of AI-adjacent themes, perhaps in terms of energy stocks?
Yeah, sure. Particularly, I guess those energy stocks would be more, more relevant, particularly in the US. As we know, the bottlenecks for development of data centers, particularly AI data centers, has been the shortage of energy. Production of electricity. But in our region, there's names such as these Korean stocks we mentioned, and also some of these Taiwanese names which are instrumental in enabling this AI revolution. A name that most people would be familiar with is Taiwan Semiconductors, TSMC, and it's still trading on a very attractive valuations. And there are also other Taiwanese names which are helping some of these US companies in terms of designing these AI ASIC chips. Names like MediaTek and Orchip in Taiwan, I think they actually probably overlooked because they're not in the US, and so the valuations actually are rather attractive compared to some of the more hyped up stocks in the United States.
some of the stocks that aren't being hyped up are Chinese stocks, not just in the AI space, but more generally as well. But of course, they're looking very cheap. Do you find anything in this space that looks appealing right now?
Yeah, sure. We actually like the Chinese market. I mean, clearly, it has not been an easy journey liking the Chinese market. But last year has been actually, the Chinese market actually went up quite a lot on the back of a few things. And the main one is just the central government finally decided to be more forceful in stimulating. We're still waiting for the follow-through of that stimulation. But it's the first time for more than a decade that the central bank in China have changed their monetary policy stance, as you probably know, from being prudent to moderately or appropriately loose. So we'll see the follow-through of that coming through. We are seeing the relaxation in property markets, and in certain cities in China are seeing the property prices having bottomed and started to go up, which is a bit encouraging. And also with respect to the tariffs war, I guess generally we are a bit less negative on the implication to China compared to, I guess, what a lot of pundits may say when it comes to the China-US tariff situation.
Yeah, I mean, MSCI China gained about, 16%? It'll be hard to kind of repeat that performance, right?
Yeah, sure. I'm not sure, because, the reality is, the stock, the Hong Kong market until last year has been down double digits for 3 years for a few reasons, for the geopolitical reasons, which we know, and also because of this big property adjustment in the Chinese market. The interesting thing is this, with the new administration coming through in the US, and given so much pressure has been applied on China over the years from that side, there is a chance to reset the relationship a bit. Not to say that it goes back to the good old days of 10 years ago, but a bit of reset is possible. Just because how many times can you beat a dead horse? And then and then the second thing is just that the biggest factor sort of dragging the Chinese economy has been this massive adjustment in the property market. We are seeing adjustment has been quite severe, and now there are signs of a recovery, a mild one at the moment. If it continues, what comes through in China in terms of macro or in terms of earnings revisions, particularly for the stronger companies, probably would surprise people. The reality is this: in the Hong Kong market, it's on a multi-decade low in terms of valuation. It's slightly below 1 times book, and I think it's 9 or 10 times PE for the market. So it's actually not factoring a very rosy outcome, shall we say, for the moment.
You mentioned, property is a structural drag, right? They may or may not be able to kind of meaningfully fix that in the short term. The consumer, I guess you'd want to hope that they don't fall into deflationary confidence spiral. If a slower rate of growth for China is the new normal, where are the kind of bright growth opportunities for investors? Yeah,
sure. Absolutely. The property. China is one of the few countries in the world which has deliberately deflated its property bubble. It's been painful, but the adjustment, the reality is, having primary property volume sales down, 60, 70% from the peak is a big adjustment. It's been a few years. So the likelihood is actually some sort of bottom forming in 2025 at some point. But, we're not betting on a massive recovery. And although, a more relaxed, a more stimulatory policy from the central bank is actually not unlikely. There are secular growth stories in China which are, seeing earnings growing at 15%, 20%, or sometimes more. And they're trading on low teens multiples. The biggest name that people may know is Tencent. It's well-known name, a few $100 billion US market cap. That stock is growing at 15 to 20% in earnings, even in the difficult Chinese macro environment, and it's actually on a teens multiple. So that's already the most well-known Chinese stock, and that's actually on an attractive valuation. Clearly, there are other less-known ones which are on even cheaper ones. So we're keeping an eye on these long-term secular winners to actually, see whether we can add to them and then certainly hold on to them. Because in the long term, I think the base case for us is just that, okay, the economy is the Chinese economy probably will not be growing at 8%, 9% again.
Right.
But certainly there is these companies continuing to develop.
Yeah, and the demographics are still there.
So. Yeah.
Joseph, really great to have you with us, particularly here in the Sydney studio. Joseph Lai, who's a Principal Portfolio Manager and Chief Investment Officer at Ox Capital. One of the stocks that, of course, we're watching, given these developments, seeming like pretty final developments on Nippon Steel and US Steel, is Nippon Steel. Those shares falling. We're down by about 0.25%. President Biden blocking that $14.1 billion takeover, citing national security concerns, not a great deal of detail being given. Nippon Steel and US Steel calling the decision political and plan to head to court to challenge it. So if this deal kind of ultimately fails in the longer run, both companies need to find an alternative source of investment and growth. India potentially will become a target for Nippon Steel, but we are seeing that downside there. Perhaps unsurprising given that Biden has long expressed his opposition to that deal, Paul.
Let's take a look at a couple of other movers as well. Daiichi Life Insurance ticking up by about 0.4%. We've had the news that Daiichi Life has sold 500 billion yen worth of Japanese government notes. That's mainly 20 to 40-year bonds in the fiscal first half. The company's president saying he also expects the Bank of Japan to raise interest rates this month, and they're preparing for higher rates by replacing some of those bonds. TDK right now unchanged. It's the iPhone supplier has announced that it's going to be rolling out new batteries to keep pace with AI. It'll start mass producing third generation cells, which are going to have 15% greater energy density than conventional batteries, and that'll help mobile devices to keep up with AI power demands. We have more ahead on the Asia trade. This is Bloomberg.
South Korea's corruption investigation officers handed the arrest warrant for impeached President Yoon to the country's police. Our chief North Asia correspondent Stephen Engel is with us in Seoul and joins us now. So what does this latest development mean, I guess, practically, given that 5-hour standoff on Friday?
Well, we're still in a standoff. We're in a physical standoff, obviously, outside the president's residence in central Seoul, where over the weekend temperatures obviously dropped below zero, and there was snow flurries yesterday. But supporters of both sides essentially gathered to show their support. But not a lot has happened other than the legal standoff is escalating, because at midnight tonight, or early morning Tuesday, is when that arrest warrant expires. That was issued by Seoul's Western District Court last Tuesday, December 31st, and lasts a week. But moves are already being made right now to potentially ask the court to extend that arrest warrant. But also, as you rightfully said, the CIO, which is the Corruption Investigation Office of high-ranking officials, which has been charged with executing essentially that arrest warrant and tried to on Friday, spent 6 hours trying to get into the compound, as you see there Friday, but was unsuccessful because of Yoon's own security apparatus surrounding his residence. Now they, according to local media, have essentially requested that the police take over those execution of the arrest warrant procedures. And we're hearing as well from Yonhap News Agency and others that the police right now are conducting an internal legal review of the process. So again, there's a legal standoff. I'm not saying it necessarily is going to erupt anytime soon, but it could if the police decide that now they have the marching orders from the court and the time is ticking down on the expiry of that arrest warrant. Perhaps they can make a move to try and detain the president today. But again, I'm getting ahead of myself as the legal machinations play out.
Well, it's certainly a tense environment, Stephen, and into this tense environment we have arriving Antony Blinken. South Korea, of course, a very important strategic defence partner in the region. What's he likely to raise in terms of his concerns?
Well, obviously, they're going to kind of, Anthony Blinken will likely reaffirm what the United States, at least the Biden administration, has long said, the ironclad alliance with South Korea. Obviously, they have tremendous mutual interest in their defense pact as well as their economic partnership. But there's a lot of uncertainty, no doubt, not only because of Yoon's impeachment, and Yoon was instrumental, of course, in working with the Biden administration as well as, Tokyo, really strengthening the trilateral relationship between the United States, Tokyo, and South Korea. So there's uncertainty now with Yoon essentially being stripped of his executive power right now, possibly could be ousted if the impeachment process goes through the Constitutional Court. And then, that other wild card is Donald Trump takes office in less than 2 weeks, of course, in the United States. And, we all know that Donald Trump has long been an advocate of its allies paying more of its defense bill. That could be a sore spot, as well as, of course, a potential increase in tariffs. So there's lots to discuss, not to mention as well the ongoing and continued threat from North Korea, which Anthony Blinken will discuss with his South Korean counterpart, the Foreign Minister Choi, today, as well as North Korea's increased cooperation with Russia in the war in Ukraine.
All right, Chief North Asia correspondent Stephen Engel there in Seoul. And we'll have more just ahead on the political turmoil in Seoul with the Korean Council for Peace and Cooperation. We'll speak to their expert advisor, Daniel Pinkston, shortly. This is Bloomberg. President Biden has blocked Nippon Steel's $14 billion takeover of U.S. Steel, citing national security concerns. For more on this, let's get to our senior energy reporter, Stephen Stapczynski. So, Stephen, this isn't the end of the matter. There's some room for legal recourse here. What's the story?
Right. We've already seen that, or we've reported that Nippon Steel and U.S. Steel are considering a potentially litigation to help push through this deal. Now, to give you a view, CFIUS and the acts of the White House and President are quite clear. They have the final say in whether or not to approve a foreign investment, a large foreign investment in a U.S. company. Now, that being said, U.S. Steel and Nippon Steel could try to target the process by which CFIUS sort of reviewed this investment altogether. They say that they had to block, or they couldn't come to a decision because of national security threats, and that's what Biden latched onto, and he used that to block the deal. However, in previous CFIUS sort of investigations, while the process is quite secretive, usually they would give a warning to a company ahead of time to kind of say, hey, we're looking at this, and right now it doesn't look like it's going to meet our expectation. We're not going to be able to make a decision, or we're going to have to block it. That would give the company some time to course correct, divest, make investments elsewhere, try to just shape it up so they can get it in the working order to push this through. However, U.S. Steel and Nippon Steel were not given the same sort of information or the same warning. And even though they provided a 100-page reply and were given more time for the CFIUS review when things were looking a bit sour, it didn't have the outcome that they were hoping for it. And that might be one area that they could latch onto. As well, they could look at how this became a political issue. That's something that they've been talking about quite extensively, and how politics kind of got in the way of this apolitical process.
Yeah, there's a lot of concern, obviously even internally within the administration, that does this sort of represent a shift when it comes to how the CFIUS and the US approaches these deals, and how that perhaps deters outside investors?
Well, that's something that you're hearing from the Treasury. We reported that Yellen was one of the people that kind of posed opposition to Biden's decision to block the deal. She wanted to make sure that CFIUS, which is under the Treasury, is as apolitical as possible. Now, this is going to create potentially a new sort of risk that companies have to take into account. Of course, we're also entering the second term of Trump. And with him coming in office, he doesn't always follow what previous administrations have done as well. So he might be able to wield that in a way to kind of shift how he wants certain things. It is going to be maybe a different era for CFIUS, maybe a different era for how presidents look at foreign investment. That all being said, Trump loves foreign investment. That's one of his big things. Even though he opposes the deal for Nippon Steel buying U.S. Steel because it has this historic importance, Trump is a big fan of investment. He's made that very clear. So going forward, it likely will have less risk. If you're investing a lot of money in the United States, at least under a Trump administration, it's not looking very likely that he would block it. It's just this one during an election year, because of the historic importance of the U.S. steel industry, the jobs in Pennsylvania, all that together was sort of a powder keg that exploded when we had the election coming up and Biden decided, who's also from Pennsylvania, to block it.
So this was blocked for national security reasons. Can we even say what national security reasons are anymore?
I think that's one of the things. We had a really good sort of a Bloomberg opinions column calling that out, saying that national security can essentially be anything. And that is one of the things that companies and government officials are going to be kind of grappling with as they look at, future M&A. For this one in particular, it was about jobs in the steel sector. The White House was worried that a foreign company purchasing U.S. steel wouldn't have the U.S. and the jobs and the employment here in their best interest. That could result in a hollowing out of the industry or loss of employment. Now, to be clear, Nippon Steel actually promised to invest more, and they also were trying to push, lobbying this entire time, that they weren't going to lay off workers as they push forward with this M&A. That all being said, going forward, the meaning of national security is one that is a bit more flexible now, it seems, is one that the White House could wield in order to get results and means that they want.
Senior energy reporter Stephen Stopczynski there. Let's take a look at what we're tracking across commodities, in particular energy markets. A little bit upside there when it comes to New York traded crude there, rising for a sixth day, just rising really. We're seeing that sort of wider market optimism fueling some of the energy bulls as well. Futures are trading near the highest since about mid-October. We've finally broken out of the narrow trading range that we've been stuck in for months now. This is the longest streak of gains that we've seen for oil in 16 months. More ahead on the Asia Trade. This is Bloomberg.
Let's take a look at how the major indexes in Asia are tracking in the early going. We've got the Nikkei back trading for the first time in 2025. A little bit of weakness there. We've got shares in Nippon Steel slipping as well after the President, Joe Biden, blocked that $14.1 billion bid by Nippon Steel to acquire U.S. Steel, citing national security concerns. Got the Kospi in positive territory, up 0.4%, despite all the political drama in South Korea at the moment. The warrant to arrest President Yoon expires at midnight Korea time today, so we are standing by for more evolution of the political scene there. We'll discuss some more on that in just a moment. Got a very weak yen in Japan as well, 157.78. Here in Australia, meanwhile, we're tracking a little bit higher by 1/3%. Keeping an eye on yields in Japan as well. We do have the yield on the 10-year now rising to 1.115%. That is the highest that we've seen since July 2011. And there is a consensus growing that we might see the next move from the BOJ perhaps around March, Heidi.
We are just getting a few more sort of indications of how various regional economies are performing at the moment. We do have the PMIs coming through for Japan, Hong Kong and Singapore. When it comes to Japan, we are seeing the composite number kind of weakening a little bit from the 50.8. We're seeing at 50.5. So still pretty comfortably in expansion territory, perhaps seeing a little bit of weakness there. Services losing a bit of ground there as well, down to just under 51. In Hong Kong, we don't see too much of a change. Staying around that sort of low 51 level. And for Singapore, we're seeing quite a step down there, 51.5 there from 53.9 in the previous reading. For Singapore in particular, we've seen that lowest reading since July 2023, and output in particular as well as new orders both fall into the lowest since February 2023. So in particular, when it comes to some of these external order reliant economies like Singapore, we'll be watching these PMI numbers very closely as we get into a year that could be quite challenging for global and regional trade.
Well, let's get more now on the political standoff in South Korea, where Hon Hai is reporting that an arrest warrant for impeached President Yoon Suk-yeol has been handed to police. Now, the warrant came after Yoon refused multiple requests to appear for questioning over his declaration of martial law last month. Joining us now is Daniel Pinkston, expert advisor at the Korean Council for Peace and Cooperation. So, Daniel, we've got an interesting situation now. President Yoon still avoiding arrest. The warrant to arrest him does expire at midnight Korea time, but at the same time, Yoon's lawyer says he's going to attend the impeachment trial for later this month. So, where are we at in this drama at the moment? What's going to happen next?
Right. It's great to be with you this morning. It's a very complicated legal landscape. I think we'll know a lot more today after the Constitutional Court meets. They have a number of agenda items, including the impeachment trials for President Yoon. They have set the dates, 3 or 4 dates later this month. The first date for the impeachment trial is the 14th of January. And I think the last date will be February 4th. Yoon's legal counsel says he will appear and he will defend himself in the court. As far as the execution of the warrant, there are a number of complicated factors in this, and the warrant does expire tonight. But Yoon's lawyers are arguing that he's being denied due process, which is a constitutional right for all Korean citizens. And under the Korean Constitution, the president can only be indicted and prosecuted for treason or insurrection. And they say it does not meet that qualification. And the Corruption Investigation Organization, which requested the subpoena, the warrant for Yoon's arrest and for searching his residence, that warrant was issued by the Seoul Western District Court. His lawyers, President Yoon's lawyers, argue that that is invalid. They don't have jurisdiction. That was struck down yesterday. His lawyers say they will appeal. So there are questions as far as the jurisdiction, which investigative agencies and which courts have jurisdiction, what crimes President Yoon can be charged with. But it's also problematic because many of the so-called co-conspirators are those who executed or followed the martial law orders back in early December. The former defense minister and others, they are also under investigation and being detained. So they need President Yoon's testimony to fulfill the investigative requirements of those cases. So it's a very complicated situation. Yoon is resisting. His lawyers are filing legal arguments. We'll see what the court rules today. And this will play out over the next couple of days, and we'll get some sense of where this is going.
Well, South Korea is such a young democracy. It only became a democracy in the 1980s, but a surprising proportion of its presidencies end in disgrace. How do we view this type of thing? Is it damaging, or is it evidence that there are robust processes in place?
Well, we will see how this plays out. I have confidence it will play out well. Obviously, there are some glaring gaps in the Constitution and in the statutes, so there are probably some needs for legal reforms. There are no perfect constitutions or perfect laws. That's why we have courts to adjudicate them, and we have legislatures to propose new legislation. So this case is going to be very interesting in how it plays out. The images on television with the protesters and so forth, it probably looks very unstable. But I think the legal and political institutions are in place to adjudicate this and to work this out in the longer run. But over the next couple of months or so, there's probably going to be some concerns about this. But I think it will be resolved in a peaceful and legal manner to the feelings of the South Korean public. And I think we'll handle this well.
It's interesting, there's been a lot of sort of American parallels and symbolism that we've seen in Yoon's supporters. I mean, even the reasons that he gave for declaring martial law, against these so-called anti-state forces kind of echo what we've seen from the Trump administration and Trump campaign, right? Do you sort of pay much attention to this group of Yoon supporters, and do you think that will be kind of a conservative voice that goes forward even after this crisis is resolved?
That very well could be. I feel that globally, we've come under the influence of information operations that are destabilizing and anti-democratic. We've seen this in many countries. I think South Korea was relatively immune, or the impact of these influence operations were not as bad relative to other countries, but now it seems like there's a rise of that. A lot of YouTube channels and social media starting to spread conspiracy theories and so forth. And of course, politicians can exploit that. People become very emotional about it. So we're starting to see more of that in South Korea. And that's certainly a concern of mine.
And at the same time, we're seeing Antony Blinken in Seoul today. He'll be headed to Tokyo after that. What are your expectations for how that trilateral relationship develops, given that there's both uncertainty when it comes to how much foreign policy continuity we'll get from, whatever the next government is and the leadership of Korea is, but certainly perhaps not a lot of continuity when President-elect Trump takes over?
Right. There's a lot of consistent and long-term national interests that coincide with the U.S. and South Korea, and as well with Japan. So I think the South Korean authorities, the government, is concerned about the incoming administration in Washington. So they're probably going to discuss that, and Secretary Blinken going to convey his views on that. They will assess whether or not that coincides with South Korea's assessment. Discuss issues in the alliance, issues in trade, what the expectations are with trade policy going forward between the U.S. and South Korea. And then as far as alliance maintenance, they want to be reassured for deterring North Korea. And then also managing some sensitive issues or areas. For example, the accusations that President Yoon ordered drone infiltration of Pyongyang back in October. And if those allegations are true, that would be an armistice violation. And under the Korean War armistice, the United Nations commander, General Brunson, who just came on here recently, the past couple of months, he's responsible for maintaining the armistice with North Korea, as well as the approximately 28,000 U.S. Military forces here. So any armistice violation, that is a very delicate issue and something that would be very sensitive for the U.S. So I think some of those concerns or, displeasure on the American side, Secretary Blinken will relay those, as well as far as the kind of damage that has done or could do to the alliance and the Mutual Defense Treaty.
Daniel Pinkston, expert advisor at the Korean Council for Peace and Cooperation, giving us his views on the ongoing political developments that we're watching very closely in South Korea. Taking a look at some of the other political stories that we're following, and Russia's defense ministry says its forces have repelled what appears to be a fresh Ukrainian offensive in the border region of Kursk. Ukraine earlier seized territory in the regions during a surprise incursion that started in mid-August. Russia has claimed back about half of that territory, and US officials say it could regain the rest in a matter of months. The Biden administration has asked the Supreme Court to reject President-elect Donald Trump's request to delay a US ban for TikTok. The Justice Department arguing that TikTok has not demonstrated it can prevail its case to justify a pause. The Supreme Court will hear the case on Friday, with oral arguments pitting national security concerns against free speech rights. Well, US President-elect Donald Trump has been ordered to appear for sentencing on Friday in his hush money criminal case. That's after a Manhattan judge denied his request to throw out the conviction on presidential immunity grounds, stating that no such immunity exists for a president-elect. The judge also indicated that Trump will not get jail time and will face no real penalty other than having the conviction on his record. More ahead on the Asia trade. This is Bloomberg.
Obviously, our job is not done. We're not at 2% yet. So we're definitely aiming still to get there, and we know the job is not done.
Fed Governor Adriana Kugler there on the US inflation fight continuing. And the latest Bloomberg Markets Live poll survey shows that US stocks and the dollar are seen as the biggest beneficiaries of US growth, set to be boosted by Donald Trump's policies. The majority of more than 500 respondents see the S&P 500 going higher this year due to strong economic and earnings growth in the US. We'll take a look at what we're seeing when it comes to US futures at the moment trading. As we see a little bit of downside there, we saw sort of US stocks just finally snapping that losing streak that it started off the year with, but S&P futures as well as NASDAQ futures looking a little bit softer at the moment. It is a very big sort of data heavy week there as well for the first full trading week of 2025, given that we have seen those jobs numbers to come into the fray there as well. We're also expecting that Treasury's curve to potentially steepen in the anticipation that we will see that boost to growth and inflation from a Trump presidency, Paul.
Well, Uniqlo parent Fast Retailing and Seven & I Holdings will be among the first to report as the latest Asia earnings season begins. Both companies are facing demand headwinds, while Seven & I is also trying to fend off a takeover bid from Canada's Couche-Tard. Earnings reporter Raina Sasaki joins us now for more. So Raina, tell us, what are we watching out for?
Yes, so operator of 7-Eleven chain 7 & I Holdings may disappoint investors with double-digit operating profit decline in the third quarter, which will be its third consecutive profit decline amid the founding father seeking to fend off the takeover bid. This is despite a growth in consumer traffic from a campaign in Japan and a recovery in in-store, same-store sales internationally. And Uniqlo owner Fast Retailing's November ending quarter is expected to see its operating profit growth soften as warmer autumn winter temperature eroded its sales. The prospect in mainland China, which accounts for nearly 20% of revenue, have also weakened after Chief Executive Officer Tadashi Yanai reiterated that the company doesn't source cotton from China's Xinjiang region, which spurred calls for boycott of its product on Chinese social media.
What are we expecting when it comes to Samsung's results?
Samsung's fourth quarter operating profit is projected to recover on the back of robust AI-related demand for high bandwidth memory chip. As its report its preliminary results on Wednesday. The Korean won's depreciation could be a tailwind for component sales, buffering margin deterioration, but upside may be limited for smartphones and TV due to rising component costs.
Our earnings reporter Raina Sasaki there with us. Well, Asian chip stocks broadly higher today after iPhone maker Hon Hai reported better than expected sales growth last quarter and gave a positive outlook as the AI infrastructure build-out accelerates. It's bringing our China correspondent Min Lo for more. So it was better than expectations. How big a beat was it?
Yeah, it's really a very strong quarter for Hon Hai to end the year with, because its sales in the last quarter came in at about $64 billion. That is a 15% increase versus expectations of a 13% increase. Its December sales was close to $19 billion, up 42%. And again, it's that AI play here. The big US firms like Microsoft, like Alphabet have been investing heavily in these data servers that Hon Hai is now diversifying into. As you can see on the chart, it's really looking to move away from just servicing Apple because Apple sales, we know last year rather, has been rather tepid, especially in mainland China. And so it's expanding into these data server businesses, which is offering higher margins, 10 to 12% versus 4 to 5% for its traditional assembly. So Hon Hai is expecting a strong sales in the first quarter of next year as well. And it's expecting that its server cloud computing business will take up the same percentage of sales as its iPhone assembly business in 2025.
Well, let's think about the context of US-China tensions and tariff threats. How big of a headwind could that be for Hon Hai?
It's going to be a headwind for the entire sector, not just Hon Hai, but Hon Hai is particularly well positioned here given that it is a very strong market leader, especially when it comes to electronics manufacturing. Hon Hai is manufacturing at about 3 times more than its closest peer, which puts it in a very strong position to bargain when it comes to volume discounts in procurement, for example. And it also has a very strong vertical integration. It has very diversified production bases, plus the solid partnerships it has built out with the likes of NVIDIA, for instance. So when NVIDIA pushes out new model launches in the next few quarters, or it increases its supply of GPU, that is going to benefit Hon Hai. Plus, Hon Hai's venture into producing chips and other components that will help it counter any risks or any slump in iPhone and PC computer sales.
All right, Bloomberg's China correspondent Min Min Lo there. We have more ahead on the Asia trade. This is Bloomberg. Singapore and Malaysia are planning to launch a special economic zone in the Malaysian state of Johor. Newspaper The Edge has reported that the neighbours could sign an agreement as soon as Monday. Bloomberg's Avril Hong has been looking at the project's promises and challenges.
Singapore and Malaysia are separated by just a short stretch of water. Now the neighbours are hoping to further bridge that gap by creating an economic hub. Located in Malaysia's southern state of Johor, the Special Economic Zone is expected to cover more than 3,500 square kilometres. That's 4 times the size of Singapore. It's likely to include a port, airport, and major highways. For Malaysia, the zone could attract billions of dollars in foreign investment. Officials hope it will create up to 100,000 jobs in Johor and boost the Malaysian economy by around $26 billion a year. For its part, Singapore would get access to abundant land and cheaper labour. Both Singapore and Malaysia view the project as a win-win.
I think is a perfect match because it's going to be so complementary to the two economies. The synergy between Singapore with its sophistication and its connection and its reputation as a trading nation, and Malaysia with its much wider capacity for manufacturing, cost advantage, resource advantage.
The surge in AI and data centers is expected to play a significant role.
We are building a data center that's $1.5 billion, and that is a significant amount of capital. And our customers would put another $3 billion of capital in that data center. So $4 to $5 billion of one data center. Now, what's that creating? Jobs. Is going to create more jobs as our suppliers also supply equipment and engineering support to our data centers. So that employment base is going to up. So there's going to be a multiplier effect because of the data center being built in a particular location.
But other factors could impact the zone's success. This border is among the busiest in the world.
Hundreds of thousands of people cross between Singapore and Malaysia each day. It's hoped that an upcoming rail link and a proposal for passport-free travel in the zone will help alleviate congestion, a key consideration for companies to manage supply chain uncertainty.
Firms have also voiced concern about a talent shortage and red tape. And while Malaysia is enjoying a period of political stability, previous crises have cast a shadow. Anwar Ibrahim is the country's 5th Prime Minister since 2018. A big question is also whether Johor's Forest City, a $100 billion real estate project, might benefit from the zone. Built by China's Country Garden, it remains largely unoccupied. It has taken intensive negotiations to get to this stage. As investors and business leaders wait for details of the zone, it'll be up to Singapore and Malaysia to deliver. Avril Hong, Bloomberg News.
We do have some breaking news when it comes to Korea. This latest development, according to Yonhap reporting, is that the Korea CIO, that's the Corruption Investigation Office for high-ranking officials, looking to extend the arrest warrant for Yoon. That's the latest that we have, and we know that earlier investigators from that office actually asked police to execute the warrant to arrest President Yoon. That initial attempt, of course, on Friday resulted in an hours-long dramatic standoff between Yoon, his supporters, and his security team, and the attempts by South Korean investigators from the CIO to try and execute that arrest. The arrest of a sitting president, of course, would be a first in South Korean history. It is very unclear what that second attempt might look like, and the police now, of course, having that execution of the warrant being handed over to them for potentially a second attempt. All of this just adding to the political crisis that has engulfed South Korea since that martial law declaration at the beginning of December, the subsequent vote, multiple votes, in fact, an ultimately successful vote for impeachment. And of course, very meaningful when it comes to financial markets, when it comes to international onlookers. Antony Blinken is in Seoul today for some of those talks, and we'll be watching very closely to see whether this sort of value-driven rebound that we've seen in Korean risk assets will continue, given the elongated nature of this ongoing crisis. That is it for the Asia Trader. Markets coverage continues.